All right, so here we go. So this is actually a training call. So tonight we are not looking at live trades, but if something just looks that good, you know, we will take it, right? But tonight is a live training call. That's what tonight is. So what you see that we have set up is what we're gonna do tonight, what we're gonna go over. You see, we have the web analyzer, which is now the vibrato. So we have the harmonic scanner. So we're gonna walk through quite a few things. I know that we have some individuals on here. I got quite a few questions, definitely want to address that. I'm gonna slow down how to trade. I'm gonna slow down the time frame confluence, gonna slow those things down. I know we had quite a few questions this morning from a few individuals, from a few things. So I definitely wanna make sure that I get those questions answered, that you all are understanding. That's where we want to make sure that we are. If you have a question, drop it in the chat. I want to make sure that you get your questions answered. Now, I am gonna advise you, if you have not been through the academy, if you've not been through the academy, the foundation of your trading, the foundation, that academy takes you through what is Forex, what, you know, it takes you through all the basics that you need to know. So I'm definitely gonna recommend, you know, what is a pip, how to count your pips, you know, all of those basic things. The harmonic scanner comes with your, it should come with your subscription, I do believe. So all of those basic things, this definitely, if not, then you do, but I do believe it comes with it. So all of those basic things, you definitely want to make sure that you go through the academy first. And then the BYOB challenge is the YouTube channel. BYOB challenge is the YouTube channel. There's a playlist called Trading the BYOB Cashout. Yes, these Tuesday and Thursday night calls are definitely there. They're definitely on the recordings, but you definitely can find, you know, definitely, like I said, you can find that information there. So that's where our Tuesday and Thursday night calls are. So definitely go back and find that information there. So now what we're looking at is, what we want to do is understand what is the BYOB cash out. So I definitely want to start there. So I am going to start with the 15-minute chart. That's where I'm going to start. So welcome. So I'm going to start with the 15-minute chart, okay? So you notice that the BYOB cash out. And so for all of you all that are new, I'm going to tell you welcome. This is the foundation. What we're covering now is actually the actual foundation of what you're learning, okay? It is actually the foundation. So you will see many individuals, you will see us talking, you will see us discussing, you will see so many cashing out and going for more than 10 pips. You will see support and resistance lines. You will see all of that. But the foundation, you have to understand the actual BYOB cash out. It's 3 simple indicators, and this is where we are. We're on this 15-minute chart. This is where it begins, okay? Now, 15-minute chart. So first things first, we have a stochastic. We have the stochastic. And then with the stochastic, we have our Hikanashi candles as well as our PSAR. Now understand what I'm looking for. What am I looking for? I am looking for three indicators. The first one is the stochastic, which is always first, okay? Always first. Now, when I look for my stochastic, you see it runs from 0 to 100. My stochastic runs from 0 to 100. Now, the stochastic is a leading indicator. It is a leading indicator. Being that it is a leading indicator, understand that yes, I'm using three indicators, but because this is a leading indicator, this is the one that I'm looking at first and foremost, okay? This is the one I'm looking at first and foremost. So I need to know if my stochastic is around the 80, I'm looking for a sell. If my stochastic is around the 20, I'm looking for a buy. So we're gonna actually look at the one that's in real time that's setting up right here. We actually have one that look like it's trying to set up, and then we have one that's already happened. So let's look at this trade here, and we're gonna look at the one that look like it's trying to set up. So right here, we have the blue line that crosses over the red around the 20, okay? Blue line cross over the red around the 20 and an upward momentum. This crossover is very important. This crossover is very important. It must cross over. And then we have to have that green candle with a flat bottom. I'm gonna try to widen this up just a little bit, but I want you to be able to see them both. Then I must have the green candle with a flat bottom and my PSAR flips to the bottom. Now you notice, okay, that everything is on the bottom. My stochastic is at the bottom, then my Hikinashi candle is at the bottom, my PSAR flips to the bottom. Now I'm gonna put an arrow here, okay? Then understand this arrow is just for us to look at because I'm gonna do what's called time frame confluence, okay? We're not there yet. Now, I have everything lined up. Remember, my stochastic must happen first. This stochastic must happen first. So if I was to push this over, okay, where my stochastic crossed, you notice that at the time of my stochastic crossing, you notice that I do have a green candle, but it has a wick. So, and my PSAR is still on the top. So this is very important for you to understand that you have to have some patience in this. You have to know that everything is not going to happen at the same time, right? So I definitely want you to understand that. And now, I want to look at this sell. So we look like we got a sell set up. So I have my blue line cross over the red around the 80. Now, you notice that it's not touching the 80. So that key word is around the 80. That's the key word, is it's around the 80. So it does not have to be dead on and spot on the 80. It's around the 80. So I don't have, this is this. Now, of course, if it's higher than 80, the higher, of course, the better. But that key word is around, okay? That keyword is around. Now you notice when this flipped, look when this was. This flipped a little while ago. The stochastic is momentum, okay? It's about momentum. It has moving average. It is a leading indicator. And when you understand these indicators, you understand the fact that it's a leading indicator. It means it's going to happen before before it happens in the market, before anything else happens. It's going to happen first. It's going to happen before the shift happens in the market. So this is actually using and predicting and calling and using it's looking at what's previously happened in the market to determine what's about to happen in the market. So that's what a leading indicator does. The other two indicators so we got our leading indicator and we have a lagging indicator. So these two are lagging indicators. So because they're lagging, that means that the shift is already starting to happen in the market. This is where the accuracy comes in. This is part of why we've talked about, or I try and I teach about how the accuracy is there in your areas of value, moving averages. These are trend candles, PSAR, support and resistance lines, trailing stop loss, all of that goes with it. But part of what this is, part of understanding, is that another thing that helps you understand is what a lagging indicator is it happens after a shift happens in the market. So you can't look at, and I'm saying that to help you understand that I can't look at this first. I cannot look at my Hikinashi candles first to determine if I'm going to take the trade. When you use the leading and the lagging indicators together, that's how I end up with more accuracy. So the stochastic is saying, based on what's happened in the past, this is what our prediction is. Now I have Hikinashi candles telling me, based on the trend, based on what's happened, based on the trend of the market, this is what we believe, this is what's happening. So that's why, so the trend of the market is actually in a sell now, or the trend of this time frame. Let me say the trend of this 15-minute chart. Then now my PSAR is actually going to flip when I have that reversal on this time frame. So now that reversal has happened. So that's where the accuracy comes in with the BYOB cash out. So now you have stochastic. We got stochastic. We have my Hikinashi candles, and now you have your PSAR that needs to flip to the top. So what we want to do is look at what's called a little time frame confluence. This one looks like it's going to flip at any time. I know I told you that this is strictly a trading call, but a training call. But let's look at what's happening right now. So now we want to go down to the 5-minute, okay? We want to drop down to the 5-minute. When I go down, let me put an arrow here. And it's real time, but I want you all to know where we are just in case we get another candle. I want to make sure everybody's looking at it because we still don't have a PSAR yet. So it's not even, it wouldn't even be considered a valid trade as of yet. Anyway, now let's go to the 5-minute. The 5-minute, we're looking at a buy on this one. So this should still be buying. See, the 5-minute happens first, okay? 5-minute happens first. So because my 5-minute happens first, my 5-minute has already happened, my 5-minute is already moving, then understand that the 5-minute should still be buying. So my 5-minute should still be buying. It's nothing about this where my 5-minute should not be buying. And now I'll show you. We'll get to that point. Let's wait till we get to that point, and I'll get there. We'll discuss that. So in here, this is selling. So you notice that I already have PSAR flips and I already have all of that that's happened on my 5-minute. But also when we start getting to the point where you understand support and resistance lines, why hasn't my PSAR flipped on the 15-minute chart yet? Well, it hasn't pushed through the support line. So that's part of that. So that PSAR shows reversal in the market. It's a trailing stop loss. It's support and resistance, right? So all of that comes into play. All of that works together. All of that is part of it. So this is definitely part of what you also want to make sure. So, so if you're trading on the 15, understand that this is already selling. So that has not flipped yet, or it actually just flipped. So, but at the point it hadn't flipped. So let's go look at the hour. And when I look at the hour, my swing in the market is in a sell for that. So my swing in the market, you see I have a red candle. So your swing in the market is in a sell. So that's actually, you can grab 10 pips out of that. So you can grab 10 pips. So that, what are the numbers on the right side tell us? This is your call price. This is one of those questions that this is that where you start in the academy. These are the things that you would get out of the academy. These numbers on the side, these are your call price. This is where the market, this is the market. So this is where it is actually at in the market. So every currency pair has a price that is associated with at that time based on where it's at in the market. So now, so the swing of the market on this one is actually in that sale. Now, when you come to this one that we looked at for a buy, so this one actually, my swing of the market was not in a buy. So would you have taken this trade? Probably not right then. Okay, so let's go back, and this was at 7:15. Okay, this was at 7:15. So okay, so just let me answer that question in just 1 second. So this was actually at 7:15, and I'm gonna come to it. Let me walk through this trade. So now if you would have waited, you would have noticed. So this is where you have to make that decision. Okay, am I using the time frame confluence, or am I not using the time frame confluence, or how and what degree and how do I utilize it? But you know, it increases your accuracy, because sometimes your naked eye doesn't catch everything. And if you're looking at this strong downtrend and you look and you see that this is a buy, do you want to take something that's against the swing of the market? Because you don't know that this is going to buy up like that. You don't know that. You don't know how this is going to play out. So the percentage decreases, your accuracy decreases, your percentage accuracy decreases when you see that, okay, this was still a strong sell. Look at this candle. So do you take the trade? We can look at it now and say, oh, it played out. But at that point, at that moment, do you take that trade? No, I don't take that trade. And so to answer the question, and then I want to show you the difference and help you understand why I say swing of the market and trend of the market, why I use the hour and the 4 hour, and that'll help you understand the harmonic scanner a lot better when we apply it and bring it back to the vibrata. Now, but I want to answer this question first, and this might not just be her question. So the numbers on the right side tell us this is the market's price. This is the call price, okay? This is the market's price. This is the currency pair's price. So where this is actually at, this is the price of this. This is the price that this particular currency pair is at right now. So when you see the call price on the boxes, what this is, now, if I'm looking at this GBP USD, now I'm gonna just switch for a moment. So let's go GBP USD. Now this is a training call, but if somebody cashes out based on what we just saw, I just need you to let me know. No, it doesn't matter. Of course, the bigger the candle, the stronger it is, right? Of course. So that means a stronger trend. And so that's a good question. That's a real good question. So when you look at, I pulled this, so GBP USD. Now, if I look at this price right here, it says called at price. So what is this price associated with, right? What is this price associated with? This price has to be associated with something. So it's associated with the price of this currency pair. So if I put this number in here, 31259. Did I not put it in there right? I did not. 31259, right? Okay. So this price is associated with something. So, and I'm gonna go ahead and address something while I'm here, because I was gonna pull this up. Now, if I see something here and I see it on the harmonic scanner, that's a win-win. Because what this does is, when we talk about areas of value where we enter the market, if you know anything about price action trading, if you know anything about that, you're looking for, there are certain things that you're looking for when you enter the market. there are certain things that you identify when you enter the market. And part of what those are is you're definitely looking at these support and resistance lines. At those support and resistance lines, they actually cross through your trend lines. They cross through when you have your higher highs and your lower lows. As you go through the academy and you learn about the higher highs and the lower lows, as you learn about the support and resistance lines, as you learn about, as you learning about the trends, just as you're learning about the rank, as you're learning about how the market moves, one of the most important things that you will learn are support and resistance lines. That is probably one of the most important things that you will learn. And what they are, if you look what these support and resistance lines are, they are literally, right? These, look at what they are. If I look to the left, just like I showed you guys on gold, and I got a gold, I want to show you something on the gold, like the things that we were setting up. We looked this morning, if you were on this morning's trading call, where gold is right now, because of everything that's happening, the market repeats itself. The highest gold had ever been is way back to 2011, 2013 is where it peaked. 2013 is the highest it ever peaked at. Well, guess what? It's the support and resistance line that it's paused at now is where I call them choke points, right? Where it paused at is the same place it stopped in 2013. So when you say look to the left, when you say peek to the left to see what happened in the past, that's exactly what it means. The market repeats itself. So if I'm looking and you see this is called at this price, that means, all that means is that at this price, and let me switch to a line chart so you can actually see, right, that this is where all those little peaks, because the line are like the little close price. So all of these close price for these candles, you see where the market, and let's go to the hour. Okay, let's go to the hour. You can kind of see where the market paused at each one of these. You see where the market paused at each one of these. And so if I just look left, if I keep going back at this call price that this box identified, at this same call price, there was some activity that happened. So that's why when we say the vibrato does the heavy lifting for you, it identifies high, it gives you vibrations, it scans the market, and it finds those vibrations, it finds those patterns that it looks for, because it's giving you a possible entry trigger. So this is a possible entry trigger that it's giving you. You still have to do your analysis. So that's what this number is that you see. That's that call price that you're looking at. It's actually down here, but that's that call price that you're looking at. So all it's saying is this identified that at this price that there was some activity happen, and it is actually at a support and resistance line, that there was something that it triggered. Now what it's looking at is, honestly, is there's some there's something, but it's the Japanese candles that most people are looking at. I like Hikinashi candles. You're starting to get a feel for Hikinashi candles. You're starting to understand Hikinashi candles. But if you take off the Hikinashi candles and you look back, this was on a 5-minute chart, and you look back to what happened on a 5-minute chart, you look at the market pattern. If you know how to read Japanese candles, you can kind of see this pattern right here that was identified. Look at this. If anybody knows anything about Japanese candles, pattern that was identified. And so the vibrato scanned the market and found that for you. You didn't have to go identify it. You didn't have to go find it. So that's what the vibrato does. But see, the Hikinashi candles combined with the PSAR, they're going to tell you the story, the real story behind the Japanese candles. They're going to give you the trend. They're going to give you all of that. So that should have answered your question. So that's what the call price is. But I also wanted to go a little bit deeper, because I wanted to go ahead and tell you, kind of give you where I was actually headed tonight with because I wanted to touch on these boxes. I wanted to touch on what the vibrato does for you in conjunction with doing the heavy lifting, with what it does when it taps on these support and resistance lines and gives you these vibrations. So that's that. So I'm gonna pause for a moment to see, do I have any questions, comments, or anything like that? Questions or comments? Question, okay. So now, what I'm gonna do is I'm gonna back all the way up to the daily chart, okay? I'm gonna back all the way up to the daily chart. So when you're trying to understand, and we're not gonna use this one, I want a trend. Definitely want a trend. Or something close enough to it. This, I guess, is fine. So when I'm trying to identify, okay, so if I'm looking at the daily chart, we're not trading from here, okay? We're not trading from the daily chart. We're not swing trading, okay? But if you look at what's been happening on the daily chart, I'm gonna take my stochastic off for a moment. If I look at what's been happening on the daily chart, okay, what I see is it's a nice little uptrend, okay? It's a nice little uptrend on the daily chart. But on today, I'm actually in a downward momentum. I'm in a downtrend. So overall, I'm in an uptrend. But we're not trading on the daily chart. I want to bring you now to the 4-hour chart. You see, you really want a big picture of what the market's doing, okay? You kind of want to have a build. It's a nice little double top. So you want a big picture. You want a big picture of what the market is doing, okay? And with this big picture of what the market is actually doing, it will help you understand whether you're scalping, whether you want to come back to, you know, trade on the hour time frame. Regardless of how you want to trade, it'll help you understand when we say, okay, are you trading with the trend of the market? Are you trading with the swing of the market? What are you doing? You know, so you understand, are you trading with the trend? Are you trading a correction? What is it that you're trading? It will help you understand, am I going for take profit 1? Am I going for take profit 2 and 3? It will help you understand exactly what it is that you're looking for, right? So you're not blindly taking a trade. You want to really understand what you're doing and why you're doing it. So if I'm on the 4-hour chart, you want to, so we're not going to look right here because right now it's a little consolidated. It's really not doing what I wanted to do. I want to pick one that's going to do what I wanted to do. So let's just look. Let's just look over here. So this, we know this was a nice uptrend, right? This was a nice uptrend. So if I'm looking at this and I know that I have a nice uptrend, okay? This was in a really nice uptrend. So if I know that I'm in a nice uptrend, and what I'm gonna do is I'm gonna mark it. So I know that I'm staying within the parameters. So you guys know that we're staying within the parameters of this uptrend. And I actually want an up candle. So we know that we're in an uptrend. No confusion. I want everybody knowing we're in an overall upward trend. Okay, this is where we are. So now, so on a 4-hour, we are in an uptrend, period. That's what we are. So even if I look at my daily, okay, now, even on my daily, for the most part, I'm in an overall uptrend. On my 4-hour, I'm in an overall uptrend, okay? That's where I'm at. I'm in an overall uptrend. Now, when I go to my hour, okay, in my hour, you see I'm in an overall uptrend. However, in that hour, look how clean my 4-hour was. Let me get rid of my stochastic first for a moment. We're not even going to focus on the stochastic just yet. I want you to understand the movement of the market. Look how clean this was, okay? Look how clean my uptrend was, okay? Nice and clean, nice and clean. So, but when I get to my hour, okay, Remember, we're in between the arrows. When I get to my hour, look what happened. In my hour, I have an uptrend, and then what do I have? I got impulse, I have correction. I got continuation, I got 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 correction, and I have continuation. So on my 4 hour, the market was nice and smooth, nice and clean. But in those 4 hour candles, in each 4 hour candle, I have 4 1 hour candles. And in each one of those candles, this market is moving nice, and I got corrections in there. And why is that? Now this is where all of this starts to come in, because each time frame below it has to cycle through. Each time frame below it. So if I look down to my 15-minute, I have more. Look at my stochastic now. See, I got a lot more momentum, a lot more movement. Look at this. What's happening? I got a lot more momentum, a lot more movement. So when I'm going to trade and I'm asking you, right, and I'm talking about, are we with the trend of the market or the swing of the market? Okay. So I'm not going to try to trade I'm not going to do this on a lower time frame, because if I'm doing this on a higher time frame, let's count some pips, right? Let's count some pips. So if I want to buy, of course, if I want to buy, it's a nice rise on a buy. I'm looking at the time. We might have to break this training down into more than one session. So this one, because the uptrend was so strong, that was 16 pips on the sell. But normally I picked a really strong uptrend intentionally to kind of show you, right? But that's 20 pips on the sell. But I picked a really, really, really strong uptrend to paint the picture for you. But all of them are not this strong, right? You look at it, they're all not this strong. So so when I tell you you're gonna grab 10 pips and just let it go, okay? You're just gonna grab 10 pips and let it go. But this one, like I said, I picked a really, really strong uptrend because I wanted to paint the picture. Because if I pick another one, you might not. I want everybody to see it very clearly. I want you to see the dramatic difference of what this is and why is it like that. So if we're on a 15-minute chart, okay, if we're on this 15-minute chart, and if on this 15-minute chart, okay, you know you're trading, and now you're looking at this sale, okay? You're looking at this sale. Oops, wrong one. You're looking at this sale. And when I'm looking at this sale, and I come right here to analyze this sale, and I ask you, is it with the trend of the market, or is it with the swing of the market? And when we go to the hour time frame, and now you see that that's in a buy still, because we're looking at time frame confluence, and I say don't take that trade. Now you should understand why. Now you should understand what the swing of the market is. Why we're not taking that trade with that's what the swing of the market is, and why that time frame confluence is so important. So this is what I want. This is part of what I wanted you to understand tonight. Why that swing of the market and that trend of the market is so important. Does that make sense? If you're with me on that, let me get a 555 in the chat. Let me get a 555 in the chat. Awesome, awesome. Now, before I go any further, do I have any questions? Do I have any comments? Any questions or any comments? Okay. So, with that being said, okay, I'm gonna delete this arrow. what is what you're looking at. If I'm trying to sell and I got a green candle here, that means the market's still buying. So I don't want to trade against this, right? So that's why my swing of the market. Now, I picked I picked a strong trend. That's why I said I wanted a strong trend, because I wanted to paint the picture for you. That's why I wanted to pick one that was a strong trend, so you could understand why when we're doing time frame confluence, you want it has to look like that hour has to look like it's about to sell. So it's something I will put on my watch list. So if it's not, like for example, if it would have been this one, right? If it would have been this one, then we could have took a sale. But and now I'm not flipping back to the 15 because we didn't analyze it. I'm just showing you, had this been the candle. So if it would have been this candle, right, I have a red candle, right? So now I know I could have grabbed my 10 pips because of what I'm looking at, okay? But we're not going to get any of them to really align because this uptrend is so strong. So they're really not going to align. And I knew that, but I did this intentionally because I want to paint this picture. I want you to understand why the swing of the market is so important, why you want that swing of the market, and what the difference is in the swing of the market and the trend of the market. So if I have the swing of the market, but if I got the swing of the market, then the swing of the market, you understand that it's what you're trading is this correction. Okay. So if it's the swing of the market, I'm really trading this correction. I'm trading a reversal. And so this is where you make your decision as a trader. Do I trade reversals or do I only trade with the trend? Many of you all have been very, very successful trading with the trends. So many of you, well, everybody should have been successful trading with the trends, but many of you have also been successful trading with the reversals. You can be successful trading reversals, but I want you to understand what you're doing so you'll know, because at no time trading a reversal should you be trying to go for a take profit 2 and 3. Take profit, now how you trade take profit 1, 2, and 3 is up to you. But setting a take profit 1, 2, and 3 is based and should be determined on what your market conditions are. Your market conditions in this situation do not, if I was trading this reversal, my market conditions say I'm going to hit a stop loss if I attempt to trade a take profit 2 and 3. The only thing I would be going for is a take profit 1 in this situation, and that's it. So when you are looking for, if I want to know if I can take profit 2 and 3, I need to be trading with the trend of the market as well. That's when I'm checking my hour and my 4 hour. When you see me on the calls flipping back and forth, and I'm like, you're like, but you just checked the 4 hour too. Yeah, I did, because I'm also looking to see what is my 4 hour doing as well. Because if you notice what I just circled, right? What did I just circle? I just circled, what did I just circle? On the hour. That was a sale on the hour. Now look at it on the 4 hour. You don't even see anything that look like a sale, right? It doesn't look anything like a sale. So now I know I will want to be, what would I want to be trading? How would I want to be trading? Okay. So this is definitely what we want to be looking at. Ah, you are so welcome, and I'm so glad. It's so helpful. I'm so glad. So glad. So glad. So now let's see here. Let me see. Let's see. Now, so we're trading. You have the trend. You want to trade. I got my trend. I got I got my trend, I got my swing of the market, I got my trend of the market. And that's what you want to make sure that you definitely understand. So now, when you're setting your take profits, you want to make sure, yeah, we might not have time to get into that harmonic. We might not have time for that tonight. But this was important to back up to make sure you got this first. So, in understanding that, you want to make sure. Now, how do you set your take profits? Okay, let's just look at that on this one. So I want to do that on the higher. Good, great. I'm glad. So I set my take profits. Okay, remember I just gave you I told you look left. Okay, we look left, and when you look left, you kind of wanna, it's going to repeat itself, right? So when I do that, I'm looking at, let's just set some lines. I'm gonna thin these out just a little bit, okay? Make them yellow, because I don't want them the same color as my piece are. So I'm gonna look left. So remember, we're buying, and you see I changed this to a line. So remember, we're buying, and you wanna, so we're looking for major. We're looking for major support and resistance lines. I'm looking for major support and resistance lines, okay? So there's another one right there, okay? And so now I have another one. So remember, it's an area. This is an area. So it's going to be an area. It's so yours might, like I put mine here, yours might be here, you know, right? But remember, it's an area, okay? It's an area. So it all of ours might look just a tad bit different. It might be, you know, just might be a little bit different here and there. So if I set this there, and then I change back to my Hikanashi candles, okay? And you can come back once you change back. Now you should be able to see where they're sitting at, okay? Now you should be able to see. And now you actually might want to make a few little adjustments once you see it. Once you get there, you can, oh, okay, let me make some little adjustments with your eyesight, which is fine, because remember, it's a zone. So do you want to hear? Do you want to hear? You know, where do you see the most touches? Where are you comfortable at? So that's where you're going to place those at, okay? So am I trading? What time frame am I trading on? You know, are we going to go back to that 15-minute chart? Because that's what we've been trading off of, which is fine. So, you know, I also could have had one down here because honestly, we were way down here, okay? So I should have had one down here. Now, that's actually like 4 take profits. So, I mean, honestly, you can have as many as you want. But that's really a few take profits. So we're going to leave it with these. Now, so if I were to enter my trade back here, I'm going to just use these right here. I'm going to just use these for the sake of training. So from here to here, we're talking about 21 pips, okay? Now I'm going to pull it up a little more. You got to know, now I'm at 36. Pull it up a little more. Now I'm at 60. So you're talking about a total of 60 pips, okay? But now we're going to go down to the 15-minute chart, okay? We're going to go down to the 15-minute chart. Now I want to help you understand. Now, understand, now look at this. So when I enter here, everything is aligned. So my 15, right, is down here at the bottom, okay? Let me show you. I want to drop something here. So, and this is why, and I want you to understand why do we start trading off the 15? Now, of course, how you trade is personal preference, how you do it. If you want to start on an hour, I can only recommend, I'm just going to tell you that I can only recommend, I'm going to tell you what I recommend and why I recommend it. That's really all I can do, right? And it's because you're going to have some significant pullback. You will have significant pullback. So I go to the 30-minute chart. I just want to paint this picture for you. My 30-minute chart, okay? This is what we were. I actually want to, So now I go to my hour. Okay, my X's. On my hour, look where my stochastic is. My stochastic way up here, okay? Look where my stochastic is. Now, on my 4 hour is still somewhere down here, but it's still looking like it's all trying to do this buy, right? It's still trying to do the same thing for the most part. So, but it's not down here at the bottom. But the point I'm making is my 15 is down here. So when I say cycle through, I'm talking about my stochastic goes up and then it comes back down, right? So when everything is in the right place, maybe I should have started from right here. Because if I go back to where that entry point was, because I'm just trying to use the support and resistance lines that are marked up. But if I go back, that's where everything is aligned up. It's all here, right? So everything is aligned up. So my 4 hours at the bottom too. So everything is down here at the bottom. Everything is right where it needs to be for you. Everything is at the bottom. Everything is at the bottom for you. So when we get to this support and resistance line, when we get up there, you notice that everything started at the bottom. So we're going to hit take profit one kind of quickly. Okay. We're going to because everything started at the bottom, my stochastic, everything started at the bottom. So we're going to hit take profit one rather quickly. But what's going to get there the fastest? My 15-minute chart. So I'm going to come back here just to kind of show you, but because I'm not going to cycle through each one of these, but I just showed you where everything was at the bottom. Then my stochastic is going to rise, but my 15-minute chart is going to get to the top of the stochastic the fastest. So then what's going to happen? My 4 hour is still taking this 4 hour time. You know, this is 15 minutes. But my 4 hour is still taking its time because it's 4 hours. It's a 4 hour candle. It's still taking its time. So my 15-minute has come up, is risen, is whether it's one long 15-minute candle or it takes a few 15-minute candles to hit. Either way, we hit take profit one. Now it cycles through. Guess what happens? You know, you might hit take profit two a little bit fast. Well, take profit one is fast. But then now we get pullback. We hit this support and resistance line. You get pullback. You're going to get pullback here because your 15-minute now, your 5-minute, your 15-minute, and all of those are going to get pulled back. These stochastics start, look what happens. These stochastics start getting pulled back here. But when I'm on an hour time frame, that's not what's happening. They are still cycling. They're still on their rise up. Look what happened. Look where my stochastic is on the hour. On the hour, it's still at the top all the way till we get to the top. On the 4 hour, the support, the stop loss is always above or below the P-star. I'll come back to the stop loss. So look, on the 4 hour, look at how many times this stochastic cycled through on the 4 hour. Once. Look at this. It cycled through once. It cycled through once. And this whole time, it cycled through one time. One time. Now look at how many times it cycled through on the 15. Look at how many times. Look at how many times that we had to watch it go up and down on the 15. This is why it takes so long to hit your take profit 3. Look at how long it took. Look at how many times it cycled through. And on the 4 hour, it went once. So you're going to hit your take profit one kind of quickly because they all went up. But then the 15-minute chart had to come down. You had to get some corrections. This is where you guys start sending messages and start, do you see what's going on with this trade? You know, what do we stay in the trade? What do I do? Do you know, do you see that I got some pullback? Do you see that it went red? No, ride the wave. This is where you have to be okay with riding the wave. And then it's going to pull back and it's going to move up and it's going to go and it's going to hit take profit 2. And then it's going to hit this support and resistance, because what happens at every support and resistance, we get pullback, right? We get pullback. And what is that pullback? Impulse, correction, continuation. Impulse, correction, continuation. Set it and let it. Exactly. Impulse, correction, continuation, and let it go. And understand, if you have to have the heart for it, take profit 3, because you're gonna set it, and it's gonna take a little bit longer to hit take profit 3. And I want you to understand that as you're setting up to start using something like the harmonic scanner in conjunction with the vibrato, because you have to have the heart for it, take profit 3. Especially like when we doing the US 30 trades. You want to do a take profit 3 for the trades that the sniper sends out with Mr. Rogers, you know, you got to, even the one I called this morning. Okay. So you definitely want to do that. Now, your stop loss. I had a question about the stop loss. Your stop loss is always above or below the PSAR. So your stop loss, when we set a stop loss, it is above or below the PSAR, period. It's always. So if I start here, it's below the PSAR, it's above. Now, when you set different take profits, this is how you set a take profit. This is how you set it. Now, if you twin trade, if you triple trade, however you do it, that's a personal preference. All of that's personal preferences. If you set it and get to take profit 2, and then you just move your stop loss up, once again, personal preference. Now, what I do, you know, I know Mr. Rogers has given how he does it. He does more than one trade, right? Another thing that you can do is, if you're taking that trade, what I do is if I'm going for a long trade, I go to the hour chart, because what do we notice on the hour chart, right? Where is my trade? Where's my arrows? And once again, everybody has a different preference. You want to keep your stop loss outside of the PSAR. You want to keep your stop loss outside of the PSAR. So whether you do a trailing stop loss on a computer, no matter what it is that you're doing, you want to keep it outside of there. This gives it more cushion. My hour, for me, gives it more cushion. As long as it's outside of the PSAR, that's what matters. Because that PSAR is when the market is going to reverse. That PSAR is when your trade turns around. That PSAR is the reversal in the market. So you want to make sure that it is outside of the PSAR. That's what's important. So how far outside of the PSAR is personal preference. So for me, I give it a little bit more cushion and go to the hour. So I'm going to get more cushion on the hour than the 15. That's when I'm pushing for a longer trade. So I want to make sure I got everything I wanted to tell you guys as we gear up for the combination. I know there's a few videos that are posted where we combined it, but I think tonight's training was important, and that's why I wanted to touch on that to help you understand, because I don't want you blindly taking trades off of there or blindly taking trades from anywhere for that matter. Because this is important. This was just too important. So do I have any questions? Oh, is the 1 hour best to mark up the charts? Absolutely. Because you want your major support and resistance lines. Absolutely. And then for example, you have your major support and resistance lines, and then I drop down, right? And then you'll see that there are some more that are in there. Those are like little dynamic ones, but you don't even see those on the major when you're on the hour and the 4 hour. So you want to use the major ones. But of course, these matter too. But you want to, when you're setting your take profits, you want to use the major ones. So that, yeah. But of course, if you're scalping, especially like on gold or something, if you're scalping, I'll set it, for that. But if you're scalping, you want to pay attention to these. You do want to pay attention to these because they do matter. So, trying to think, it was something else. Questions, comments in the meantime, comments, got like a minute or two. I really want you guys to know how to navigate, understand the charts, be able to move through them. No questions, comments, concerns, then All right, that means you got it. That means we're cashing out in the morning again. We had a great morning. We had a great morning. We had a great morning. We had a great morning, right? We had a great morning. So if you cashed out with us this morning, let me get a 77777 in the chat. If you cashed out, let me get a 777 in the chat. Look at there, look at there, look at there. That is phenomenal. And I say that, I'm just excited, right? I'm excited. You all had a wonderful, wonderful day. Oh, you guys are so welcome, right? You're so welcome. And it is honestly a pleasure. So it is honestly a pleasure. So, and it's a pleasure, and you are a master trader. You guys are master traders. You are the signal. BYOB, 1 million families. 1 million families financially educated, financially impacted. 1 million families. So affirmations, let me tell you. Affirmations. Okay, real quick question. When the PSARs are steadily going down, why does the stochastic go down? Wait, when the PSARs are steadily going down, why does the stochastic go down? There are two separate indicators. So don't correlate them together, but when you have both of them doing, so when you actually have both of them going, that's a good thing. The stochastic is one indicator. The PSARs are a separate indicator. So if I have two, when I have all three indicators doing what I need them to do, then I have a valid trade. So there are three separate indicators that work together, if that makes sense. So there are three different indicators, and you want to read them separately. So when they're working together, so if all three of them are doing, when you read them separately and you got all three doing what you need them to do, then that's when you know you got the valid setup. So, but with that being said, Orlando, stand up, Orlando. BYOB, master traders. Orlando. We are coming to you. I tell you, Orlando, Florida. We will be in Orlando, Florida on the 18th of January. This is BYOB, the Be Your Own Bank Expo. I tell you what, we are going back to the basics. We are taking this back to the basics. And this is an event you do not want to miss. Be Your Own Bank. We are definitely, you are a master trader. You are the signal. And we are empowering you. If you got something from this event, if you get something every time you log onto this call, if you grab a nugget, you increasing your trade account, if you're understanding how to navigate through the market just a little bit more, then guess what? You want to be at this event. You want to bring your guests. You want to bring your family. You want to bring, you definitely want to be there. So make sure you get registered. Make sure you're registered. The registration link has been dropped in the Telegram. The registration link has been dropped in the Facebook group. So you want to make sure that you're registered. And that's at byobworldwide.ticketleague.com/back to the basics. So we're definitely looking forward to seeing you there, because we are taking this back to the basics. This is kicking off 2020. We've declared war on poverty. 1 million families. 1 million families financially educated. 1 million families financially educated and impacted. And that 1 million families begins with you. So with that being said, ladies and gentlemen, it is definitely time to transition